Hello everyone, hope you're doing well today. So we have some very good news that just came out that I've rushed to make this video about. We also have an interesting price action that we're going to talk about in just a second. But let's not get too hopeful just yet, because there is something crazy that just came out as well, which is probably overriding all of it. So if you're into cryptocurrencies, if you're into Bitcoin, or really into any other cryptocurrency out there, you really want to watch this video, because what I'm going to talk about is going to be very painful, and also some of the stuff is going to be XRP. So if you're very interested in all this stuff, then you know what to do. Hit that subscribe button, hit that notification bell so that you're always notified when I make a new upload. And also go down below and call me Mr. Spot On, because we've done really well this year. And if you're interested in how well we've done, then you are always welcome to go down into the description of this video, as well as into the pinned comment, and join my free Discord channel, because this is where we post all of our trades. You can see all the explanations, the trade controls, take profits, stop losses, everything for absolutely free. And the trade results of our community are absolutely astonishing. 82% on just one trade right here, which is absolutely incredible. So if you're not part of this community, go down into the description of this video and join us right now. So before we come back and talk about the technicals and everything that is happening, let's quickly go through everything that just literally happened just now. So number one, which is actually quite bullish, and that is the US initial jobless claims. This is what we've been waiting for, and this is what I told you about in my previous video. It's a very important one, by the way. If you haven't seen it, this is one of the most important videos on my whole YouTube channel. I'm gonna link it right here. Pause this video, check out this video, and then come back to this one, because this video right here is insanely important. So basically, the US jobless claims, so basically reported unemployment, came in as the forecast, 230,000 jobless claims. So this is pretty bad for the economy, but at the same time, it actually signalizing that people are starting to lose jobs. So Powell might start to, think about pivoting or slowing down rate hikes. This is what we wanted to see. So at least it's not less. So this is actually, it's counterintuitive, but it's good for us. But before we celebrate, let's take a look at two pieces of information that are just gonna make you want to throw up. So number one is this one. We really have been waiting for a very long time as to what is gonna happen between SEC and Ripple. And here is an interesting article. Again, I'm a firm believer that Ripple has a very good case, but here is a different point of view, that Ripple could actually lose against SEC, and one crypto executive claims this. So basically, a former public company CEO says that the federal judges are skeptical enough to know that most people bought XRP hoping that the number would go up. Hence the arguments of Ripple and its supporters about the cryptocurrency alleged utility likely won't fly. Is this a good point? Again, this is he said, she said. It's just all the matter of opinions, but you cannot really rule this out, because tell me in the comments, how many of you were buying XRP in just because it's XRP, or because you thought it's gonna go up? So this is what they're saying this right here, that it was obviously a security. And Hoffman, who has decades of experience working with SEC, has pointed to the fact that the regulator has not lost a Section 5 case in decades, that's what it is, adding that there is very little difference, and this is probably the most painful one, between XRP and LBRY credits, so LBC tokens. As reported by You Today, peer-to-peer content distribution network LBRY was defeated by SEC in November, which we remember, which set actually quite a nasty precedent, with the court ruling that the startup offered LBC tokens as unregistered securities. Furthermore, while Hoffman agrees that SEC's handling of Hinman's infamous Ethereum speech from 2018, which is, again, guys and girls, this is what the whole defense of Ripple is hinging on right now, that a person from SEC came out and said that Ethereum is not a security. So, and he agrees here that it's certainly a mess, but he's convinced that it has no bearing on the case in general, which is a different point of view. Let me know what you guys think down in the comments, because if XRP is going to lose, oh man, it's going to set a terrible precedent, and SEC and Gary Gensler is going to go after every single cryptocurrency except for Bitcoin, and maybe at best Ethereum. So Bitcoin maxis are gonna celebrate, because all the money is probably gonna go to Bitcoin, and we're gonna see an incredible Bitcoin season, and altcoins, or most, are probably gonna die. But if you thought that this is not so nice, and you're like, Thomas, give us something good, and this time, guys and girls, my apologies, but here is the last nail in the coffin. Here it is. A key indicator of a coming economic downturn is pricing in nearly 100% chance of a Powell recession in 2023. So, and yeah, this is pretty much was my face when I actually read this. So the New York Fed's recession probability model, and this is, the model that we're talking about here, is flashing alarms for an incoming downturn with odds at 38%. So if you would think about this, that 38% is not that bad, but wait until we're gonna dig deeper into this. But given how reliable the indicator is, that's really a near 100% chance of a recession, according to data tracks Nicholas Colas, whatever this guy's name is. So let's just dig a bit deeper. So basically the model, it measures the difference between yields on a 3-month and 10-year treasury, similar to 2 to 10 treasury curve, which is, if you don't know what this is, then go Google it right now. It's going to make more sense, the whole thing here, which is a notorious bellwether of a recession when the curve is inverted. And we've seen this inversion, like the inversion right now is really bad, really deep. So analysts have called the 3 to 10 treasury curve a more accurate predictor, and Federal Reserve Chair Jerome Powell has previously called it his preferred recession warning. And it's now signaling a 38% probability of a recession, according to New York Fed, but the indicator is really sounding alarms for a near 100% chance of a recession, given how reliable it is. So basically what it means is, right here, last piece of data, we're almost finished before we move on to the price chart, and we're going to talk about all the technical details. So he pointed to the model's track record, which is the most important here. Over the last 60 years, noting that 9 of 11 times, focus right now, 9 out of 11 times, a probability reading over 30% was able to predict a downturn, therefore a recession. It's clearly saying high short-term interest rates are going to cause a recession in the next 12 months. Moreover, these odds are very likely to increase as he's referring to the expected 50 basis points rate hike at next week's Federal Open Markets Committee meeting, so FOMC meeting on December the 14th. We are going to be watching what they're going to decide in terms of the interest rates. Well, that's a slowdown from a recent streak of 75 basis point hikes. The probability model suggests that the markets, and this is the most painful part, that the markets already see rates as too restrictive, meaning there could be a Fed-induced recession, and it's called, like right now they're calling it Powell recession. So, and there's going to be a lot of questions that Jerome Powell should be answering, since the Fed model is showing a 38% chance of a recession right now. So why is this bad? And this is terrible, simply because if we're going to see a recession, obviously, just historically, Fed pivots too late, and the Fed pivot is followed by another humongous dump in S&P 500, which is going to drag down Bitcoin again, something to sub $10,000 for sure. And right now it seems like it almost is 100% chance, which is very painful, guys and girls. I don't know, tell me in the comments, what do you guys think? So in the price, we're not really seeing a huge reaction to this increase in jobless claims, which for us should have been positive, just potentially because this thing right here, once again. So if we're going to zoom out, then, well, number one, we're going to see that we are seeing this very important consolidation, which is coming to the end right here, which should break out very soon. We're going to go to a bigger time frame. Then you're going to see that we currently are theoretically squeezing this very important support. And also we have this resistance that was readjusted for a little bit of a different angle of a resistance, but which is, to be honest, at this point quite irrelevant. So just technically, if we're going to be breaking down below, again, I'm out of my long trade for the time being, and I was really expecting if we're going to see an increase in jobless claims, maybe I would entertain a possibility of going long, which would feed this narrative of a short-term relief rally, December, Santa Christmas rally, whatever. But seeing all of this, that we're hovering, we're staring down the barrel of a recession right now, I'd be more likely to actually short Bitcoin than to long it. But again, just technically, well, number one, all of our trades are going to be in Discord, so go join us right now, link down in the description. But just technically, it's quite simple. If we're going to be going upward, then this is going to be just a part of this slight up move that is tradable. But again, all these trades are going to be down in our Discord channel. As for right now, for this to continue, the only real hopium scenario that we have for a short-term up move as well is in S&P 500, because again, we're just juggling along right here, and potentially as you would just bounced off of it right here and could potentially retest this resistance, which historically has been very important for us right here. This gives us some room for S&P to move higher, and also for Bitcoin to actually do the same and kind of move in the same pattern, which is again tradable. But if you want to be taking this kind of a trade, wait at least for a break above from this wedge with some confirmation, with some volume right here, and then your target could be something at least, something reasonable like 17,300 or 17,500 at the most. But it could be a very nice short-term trade with a very small, tiny stop loss. This could be your entry point. This could be your take profit with some small take profits along the way, and your stop loss right here. So very beautiful 10 to 1. But again, trade responsibly, and if you wanted really a good exchange that you can trust, then use my link down in the description of this video or in the pinned comment to BitGet, and you can claim all of these bonuses that you see on the screen, including a $8,000 initial deposit bonus, which you can use for your own trading. And if you deposit more than $500, you can actually get my famous paid crypto course for absolutely free. And as always, guys and girls, check out this tutorial that I've done that teaches you how to use BitGet. And let me know in the comments what do you guys think about the current situation and whether you are bearish or bullish. And as always, peace and love. Tom Scrollo. Stay smart, stay rich, and I'll see you in the next video. Bye-bye.